All right, welcome back, everyone. It is Monday morning with the one and only Cody Davis. We'll dig into it, but how's it going, man?
Sounds like my portfolio is drier than yours.
Yeah, little maintenance issue right before you went live, but that's part of real estate, right? I know you had a lot of stuff you're working on, but I also want to dig into one of your more recent videos with Michael Zuber. You folks were talking about tips to get wealthier, right? And you guys kind of dug into like 2026, how to get rich and whatnot. But maybe you can summarize that video a little bit that you and Zuber did.
Yeah, well, the goal is to get to wherever you want to be in the most efficient path that you see fit for yourself, and avoiding shiny object syndrome, where you're doing a whole bunch of stuff. The idea of making more while doing less was a topic that we touched on, because you don't have to do a whole lot to get wealthy. You got to do a lot of the same thing for a period of time, but it's usually just one or two things that you're doing. And so it's the idea of doing the daily disciplines and not getting distracted. My biggest drawbacks have been when I've gotten distracted, like doing the hotel deal and the motel conversions. I should have just stuck with the apartments. And I mean, I'm sure we're going to jump more into just different tips because we didn't touch a whole lot on that video. But having a goal, stick to the goal until you hit the goal, and not getting distracted along the way.
Yeah, the one thing I listened to it again and I found interesting, like you said, you did talk about the shiny object syndrome, but for you, you're also talking about just how many things you're trying to do in the beginning, right? I think I don't know if it was MLM sales, but you're trying to do you're flipping cars and you're doing all these other type of things too, right? Instead of just focusing on one thing. But so where did that start from? Because everybody knows you're a youngster to most of us, but when did like all of that trying to do different things kind of where did that come from? I was just partying and having fun at your age, probably.
Well, it just seemed like a fun thing to do. I had a 1991 Miata, and I had been working on it for a while. Didn't know a lot, so I was like, "What if I found a really cheap one somewhere and flipped it, made a little bit of money?" And so I bought one, and basically, I lost a little bit after it was all said and done, but I learned what not to do. I wanted to do affiliate sales, the online thing where you build a page and then people buy through you, and if they buy $100 product, maybe you make $1. You start building up income streams. Didn't make any money from that because I didn't know what I was doing. And I went to different conferences, not on purpose. When I was a real estate agent, someone took me to this get rich quick thing, and it ended up being an Amway thing I didn't know anything about, and then I learned about it promptly after I heard for an hour and a half of them talking about how great their life was.
Quickly though, the Miata you just touched on, was that the one you mentioned too in the videos? Like you just sit in the parking lot or the gas station, I think you said, in between projects you're working on.
Yeah,
Was
so well, that was not the one I wanted to flip. That was just one that I was daily driving until it got stolen, and I would drive it 3 hours one way, 3 hours back. And for those who don't know Washington State, it gets rather humid and cold and wet in the winter. And so driving a convertible from the 90s, a Miata at that, it's not very waterproof. So my windows would always fog up driving over the pass. And so I'd have to have the heat on full blast and I'd be sweating. It would be the worst thing ever. Don't recommend. But that was the daily driver, and I would sleep in that car, which is not a very comfortable sleeper.
Shoot, man, wait till you get older and try to drive when it's raining and nighttime, and it's the joke is always, for some reason, we think turning the radio down is going to help us see better while we're driving,
Hmm.
right? But before we move on, I did see a couple questions. Flavio, I guess, is here. He just wanted to ask, though, sorry, off the topic a little bit, but you said not buying a hotel again. Maybe you can quickly touch on that, I think.
Yeah, I've bought two motels, and I bought the Robin Hood Resort. I don't own that anymore. I don't own the motels anymore. I I sold out of one motel at break even and I made a good profit on the second one. The Robinhood, I just had to shift around equities. So I basically got out of that deal and gave up other stuff and to simplify my universe. And I've talked about that on past videos. But had I just focused on apartments, I would have been richer today. But since I did that adventure, I learned a lot. So, instead of having more money, I have more experience.
And I think I also heard you mention, which really I took away from that video with you and Zuber. I think you mentioned something about get paid for what you did and not for what you do. Is that the? Am I saying it the correct way?
Yeah, that is the correct way to put it. Rich people find a way to get paid for what they did, not what they do. So most of my money comes from what I did in the past, not what I do today. I do things today that bring in money and like active things like acquisitions, potentially doing a 1031 and facilitating that and figuring out where I'm going to put that money. Doing cash out refi is a little bit active, but the recurring revenue that comes from the rentals, be it not all profit right now, that that is going to be a recurring thing based on something that I did in the past. And to the extent that you can build most of your income model for what you have done in the past or what you're doing today rather than what you're doing in the future, and that's going to determine how wealthy you can get. Because if you have to keep doing repetitive things to get money in, that gets old. If you can build a system now, regardless of what age, that will pay you for the rest of your life, then your odds of getting wealthier go up.
Yeah, I really like that saying, and that's like I said, that caught me in that video. So, like I said, the people tuning in, we are kind of recapping Cody's recent videos with Michael Zuber on tips to get wealthier. I do see a question here from Harrison, Trade Better 99. Zuber was touching on this on his daily financial news a little bit this morning. How he doesn't really have a routine in the morning. Though he wakes up, he has his coffee, and he just does like 60 to 90 minutes of kind of reading and searching the internet for the information he's going to use for his daily financial news. But Harrison is asking Cody, what helps you stay on goal? Do you have a morning routine that helps you keep focused?
I just figure out whatever I want and try and shoot for that. So if something that I found, a lot of people think they know what they want, they don't truly know what they want. So when they're doing their day to day, they think they know what they want, and then what they want that day shifts, and so they do something else that's not on brand for their goal and what they really truly want deep inside. So I mapped out what I want, pretty clear on that. And when you know what you want and you have a path to get it, typically you're not going to just walk off the path. If you think about it, like there are good decisions and bad decisions that'll move you either closer to what you want or further away from what you want. And if you're aware of what you're doing, which you should be, if more often than not, if you're aware of what you're doing, it's either going to move you closer or further away. And that's just a decision you have to make. So like, for me, I want to have a family. And so a decision that I've made consistently is simplify the universe, get out of a bunch of convoluted partnerships, put some more reserves in the bank, and upgrade into a property. Because if I do that, I'll have more predictable cash flow and less stress to have a family. Another thing is I want to have a car that I wouldn't daily drive. It would be a McLaren and a 60s Porsche. Well, in order to have those, I need to have a garage. So I need to put myself in a position to number one, have the family. And then two, I need to have a house that could merit that. So I'm either making decisions that are going to get me closer to those things or further away. And that's just a daily decision of when I'm looking at opportunities that pop up. There have been zero down motel conversions I could have bought, but it wouldn't have gotten me closer to that goal. It just would have made more money. And that's not the objective.
Yeah, I think Zuber mentioned that too one time on one of your videos, right? The young or older or younger, I don't know how you want it, older Cody or the younger version of Cody, right? Would have purchased those properties, right? But now
Hmm.
you're looking at it how it's impacting your end goal. See, I knew it was true. Corridor Chris says yes. Turning the radio down does work though when you're when you're driving. It makes it easier to see. I knew it, but he does say he also adds in a good cycle. What you do today becomes what you did and keeps paying you. Daily habits compounded. Nice. Harrison Trey Better 99 is asking Cody, did you ever think of living out of the hotel doing the uh I don't know who that. I never heard of this person. Have you heard of this person?
No,
Onish
I
or
I did live at the resort property for a while, but the problem was, while this was a bad decision, I lived there and it didn't cost me any money to live there. Live there for free. But it cost me a ton of time because what I ended up doing was I would drive once a week to Moses Lake, which was 5.5 hours both ways instead of 3 hours both ways. And then I would drive to Renton every other day, which was 2.5 hours or so, depending on the traffic, both ways. So at the cost of my time, I saved money. That was a bad trade. I was supposed to be living there to work on the property, and then I ended up being everywhere but the property. So it was a bad judgment call, and I learned from that. But I wouldn't want to live at my hotel. If I had brand new apartments, I'd live at my apartments.
talking about right before we hopped on this call too, I had a maintenance request. I think Nick Lead Pray Huddle jinxed me because I have a little leak at one of my properties right now, and he also dealt with that on Saturday. So that's why our Bitcoin live got rescheduled because right before we were going on, the contractor showed up to take a look at the leak he was dealing with, and I believe California was having these once in a so many years storm coming through. So we had to delay the Bitcoin weekly. But let's see. Flavio is asking, what made you think at a young age get into real estate? You were surrounded by an investor at the time, possibly?
No, I had read Rich Dad Poor Dad, and back in high school, I was taking a civics class. Mr. Davies was my teacher, and this is in Tacoma, Washington. I was at Wilson High School at the time before they renamed it. And he said, "Hey, if you come to school on the last day," which nobody did, "you come to school on the last day, I'll teach you how to make money when you sleep. You don't have to come, but you can." And so I went, and he talked about how he bought real estate. And he was also an attorney. He taught for fun, but he was an attorney. And I asked him, "Have you made more money from real estate investing or from being an attorney?" Because in my mind, attorneys were some of the highest paid people. And he said, "Real estate by far." And so I had read Rich Dad Poor Dad, and that got me excited about real estate. I had read the book actually a couple years before that, but there you get excited about making money, and then you realize you're like 14 years old and there's nothing you can do. So you put it down, and then you hear that again later in life, 4 years later at the end of high school. That would have been 2018. And you read the book again, and it clicks a little bit more. And later down the road, I was doing some yard work, landscaping stuff, and someone said that I should join this real estate page, and it was called WARI, which is just the Washington Real Estate Investor Forum. And I put a little intro about me, what I was doing. I was 18, wanted to get a duplex at 21. That was the mindset I had from that book. Someone said I should not do all those jobs. Talking about Target, coaching gymnastics, and Safeway. Those were the plan. 3 different jobs, work a whole bunch of hours, save a bunch of money, as much as I could, and then buy at 21. And he said, "Don't do that. Join my real estate brokerage." And that was a pivotal point for me.
That's so amazing that even at that age, you had people around you even putting that in your ear. Like I mean, I don't know. I find that very unique. I think I don't know if people in the chat would say they've had people, when they're even 17, 18, getting out of high school, that people in their circles or people they knew were talking to them about, real estate, making money. Like I said, I was just goofing off and looking for a job, basically. A sense of, like they said, right? Who you surround yourself with is definitely important. Whatever circles you're around. But also funny about the Rich Dad Poor Dad. My uncle who was in real estate, he actually gave all the nephews and nieces that book to read. And at the time, I don't know, I must have been about she's 25, 26, I think, when I read it the first time. And it didn't resonate with me because for me, when I saw everyone in Hawaii, they were just buying homes and just sitting on it for 30 years. And then they're, considered wealthy, right? Or a millionaire after. So that's what the book to me didn't make any sense. Like, oh, no way, your home is an asset and all this type of things. And it really didn't make sense to me. And then I read it again a few years later, and then it's like, oh, okay, I wasted all this time. But I'm glad it clicked at some point for me. But yeah, I think everyone does have the same sentiment about you. So Nick Lead Pray Huddle. I don't know. Before I read his comment too, if anyone hasn't subscribed to his channel, he's trying to get to 300. I know he's two away. He may have hit it over the weekend, but I'll put his channel in the chat. But he says, yes, Cody is an impressive young man. Yeah, I think everyone kind of feels that same sentiment. That's why you're kicking it off at the Vegas event in February, kicking off the day one speaker. And people are also going to have kids or teenagers are going to have an opportunity. Is it going to be a group setting, sit down, or is it going to be like one on one with these individuals?
I mentioned to Zuber if he wants to do group or one on one, either works. Yeah,
And
I
if
mean, one on one's great. I think that's better for folks. But I mean, if the other thing is when I was that age, I was very nervous to do one on one. So I wouldn't have asked the same questions if I had been in a group setting. So whatever people feel like doing is what we shall do.
And also, if people haven't heard, if you join school, you'll get a chance to see the Vegas event streamed live in school. So you have to be a part of school though. So Zuber's going to offer that to people that can watch it live. And also, I think January 15th is the cutoff for tickets. So if you haven't bought your ticket yet and you're thinking about going, he's going to cut off ticket sales by January 15th. Let's see. Let me see. Flavio is saying, in a couple of years from now, I would like you to talk to my son about real estate because kids never listen to their parents. Interesting.
Yeah, that's fine. By then, you should have some apartment buildings too.
Yes, right. So that you and Flavio, you had coffee the other week, and I think he's trying to figure out how to 1031 right into some other things, I believe, right?
Last I heard, he was going to do his refinance and pull some money out and then use that to buy. And when you have the cash, I mean, buying an actual apartment building is quite easy. The steps are very simple, and it's easier to qualify for an apartment loan. I've found, especially if you have the cash, than it is to qualify for a home loan. So that should be pretty simple for him to do when he's ready.
All right, so I put Nick's Lead Pray Huddle channel in the chat. So hopefully he did get to 300, or if he hasn't, we can get him there by the end of this live stream today. But he's also saying, this is a good idea, I think. So maybe you can ask the teens that will be going to the event that you're going to speak with to maybe read or listen to Rich Dad Poor Dad Audible before going to the event. And then maybe that could be part of the discussion when you have a sit down. But yeah, I think that's a great idea. So let's see. So like I said, we're kind of recapping Cody's recent video with Michael Zuber about tips to get wealthier. And you do, like I said, you touched on it also. You mentioned the shiny object syndrome. But at what point did you realize doing more was actually maybe holding you back financially?
The people that I had met that were doing really well, which it wasn't a lot. And there's a lot of fakers in real estate, and a lot of the forums, a lot of people are boasting these numbers, but they're not actually doing financially well. Talking about all these deals they're doing. The people that I found that were doing quite well were the ones who were doing less. It was an observation. And back then I'd started listening to like Grant Cardone and Ken McElroy and Ken as mentioned many times, like you got to figure out how to make more doing less. That's what really successful people do. And Cardone have been talking about all most of his wealth has been from apartments. He had to go do his business to get the money to put into the apartments originally, but he's made his wealth through buying and holding real estate. And so it singles down to one thing. And for Ken, that was managing properties better than others. For Grant, it was marketing better than others. And then buying these great deals. So it was an observation, and then hearing from those folks directly that you can make more doing less, and no reason to reinvent the wheel. And those people are way more successful than, financially speaking, than majority of folks out there. So I might as well listen to them and see where it goes. And it turns out they are right.
I love how you just said, no need to reinvent the wheel. And I think a lot of people out there, that's kind of the common thing I see is that a lot of people are trying to reinvent the wheel. And when the blueprint is out there, right? And you just got to figure out which one kind of suits your goals maybe better. But the blueprint is out there and it's pretty simple to follow. And for some reason, people are always trying to reinvent it for some reason. But yes, Coach Nick is saying, yeah, Dion and Coach Carson, less is more for the life I love. Yeah, definitely. Let's see. And also in that video, you and Juber touched on, I think one important takeaway was, um, like I said, maybe I'm not saying it the correct way, but how you have to be willing to make mistakes and uh, not be embarrassed about it in a sense, right? Is that kind of the proper way I'm saying it?
Yeah, if you're unwilling to look stupid or unwilling to make mistakes publicly, then it's going to be very difficult to move forward quickly anyway.
Is
The
there one you
biggest
could?
mistakes,
Oh,
I was just gonna say, the biggest mistakes I've made are where I've learned the most. It's hard to learn when you're just winning. I mean, you feel the best.
was there one that maybe you can touch on that maybe embarrassed you the most, maybe in a sense?
Mm, I put trust into people early on in my journey that abused it, and that was a bummer. That was a big bummer. I'm not talking about any of my recent partnerships. It's probably people that, if I said a first name, most of the people watching wouldn't know. But I'm not going to say it anyway. But first, one of the first people I looked up to I was close to. I met him when I was 18, and I put a lot of trust in him. And it just decisions were made on their end that abused the trust, and it was just a shame. It's like you put a whole bunch of trust and time and effort into someone, and then it just goes south. So they self sabotaged their situation a bit, and it was a bummer to watch that all unfold. But I mean, you live and learn. So I did not vet anybody in the beginning, because who was I to vet anybody? I was an 18-year-old, no money, no experience. So that was a tough pill to swallow.
Trisha is saying, and hopefully her ankle or foot is getting better. But she's not going to be able to attend the event now because of her injury, but at least she'll be able to see it live streaming now. But she says the risk of public mistakes does hold her back. Yeah, I think that's very common. So what would you try to tell an individual, and maybe Trisha, but I think I hear a lot of people like they don't want to tell people what they're doing. Like, they don't want to tell people they're buying real estate or even like want people to know that they're investing, right? They're an investor. So how would you try to maybe convince that person like it's good to put yourself out there and let people know what you're doing, right?
Yeah, I'd say don't let what you don't want to happen stop you from getting what you do want to happen. So to simply put that, if there's a couple things that could pop up that you really don't want to pop up, it's a possibility they happen. But that's in between where you are and where you want to be. Then you either have to engineer a new path and go do something different, or you just have to trek through it. There have been things I really didn't want to do, Some partnerships I didn't really want to split up because it would be expensive, like really expensive time wise and money wise for me. But it was a mistake that I had to overcome from past decisions. One of my past decisions that was a mistake was giving equity up too soon. So, how do you pay for that? Well, with money and time. So, I had to bite the bullet and move forward. But you got to be willing to make those mistakes if you do want to get what you truly want, because there's going to be some mistakes between where you are and where you want to be. It's where you have a lot of the growth and make a lot of the money or quit. I mean, you don't necessarily make the money, you could quit. So,
Yeah, and Frank, old guy REI, he's very transparent about a lot of maybe his mistakes or failures, possibly. But he puts out his van confessions on his YouTube channel. But he does say all mine embarrass me, but it's a great way to help others. So yeah, I definitely think Frank is helping a lot of people in the community by sharing mistakes he's made or even struggles he's going through and have gone through. But it does help a lot of the newer people realize that it happens to everyone for the most part. I mean, even someone like yourself who's big on been on Bigger Pockets and interview with Michael Zuber on a regular basis. It shows that it's part of the journey, right, to some extent. And here's Yasik. Yasik is saying he'd take one easy dollar over two hard dollars every day. What's your thoughts on? He likes to say that a lot of times in the Zoom calls and accountability groups. But what would be your takeaway from Yasik saying that?
as long as you have enough easy dollars to make it happen. But if you don't have enough easy dollars, time to go get some hard ones.
Yeah, looks like Coach Nick. Yeah, maybe we can get Coach Nick on next week, Monday. Cody's usually a regular on Monday, so Coach Nick says he's on Christmas break from coaching, so maybe we'll get him on. I don't know. No Bitcoin for you though, right? Your precious metals. If you any alternative assets or anything.
Yeah, but I mean, that's not a big part of my world right now. I mean, that will be when there's more free
Yeah,
cash flow and less maintenance. I'd rather. So basically, for the cost of a gold coin, I could redo a shower right now. I could redo a shower and all the plumbing lines from it. So I just redid a couple showers and main drain lines and valves. And I would rather continue to do that and improve the quality of my asset than buy a gold coin at this point. And I have some, but it would be wiser to invest the money into a productive asset rather than a non-productive asset.
yeah, I totally agree. Even not everyone believes in the infinite banking, the whole life policies, but that's kind of my take on that, right? You have to funnel it to get the cash value, but where I'm at in my journey to that money has better use instead of funneling it through the whole life policy. But at some point, that's an option, or like you're saying, or Bitcoin, where there is enough cash coming through where you're just going to park it in these other places. Hey, morning, Janelle. Chris Wissing is tuning in. His son is going to be one of the teenagers having a sit down with you in Vegas. Chris's son took advantage of the opportunity to come to Vegas and check out the event. Trisha is saying, "Oh, cool." She says that she has a YouTube channel all lined up about my real estate journey, but public knowledge of my private thoughts is terrifying at times. And and my ankle, okay, and her ankle is improving. Do you have any thoughts you could about her saying, about her, oops, about her private thoughts terrifying, putting it out there, I guess, or I would say just do it, man.
If you want to do it, if you want to be public, go for it. I look back though, I don't think I can get rid of myself on the internet now. So if it goes well, you're definitely going to be out there. So it just has to be a decision if that's what you want to do. The wealthiest people that I know that aren't famous are not public faces. So like if we talk about Kiyosaki or Cardone or McElroy or Dave Ramsey or any of those people, most people are going to know their name. If you don't want to be that person, the next most successful people I know have no Instagram, no YouTube, no Facebook. I mean, there's some wealthy people on YouTube and Facebook helping people out, but the people I know that are not there are significantly stronger financially. So you don't have to put yourself out there. I mean, it's not necessary. If you want to do it, then do it. And if it helps you out with your goals, gives you confidence, whatever it may be that you think you're going to get from it, go for it. But if it doesn't go well and you don't like it, if you get 7 views, it's like, well, your terrifying thoughts are going to be watched by 7 people. Like, if you truly don't like it, that's your opportunity. Like, that's going to be the expense. It's like, oh no, 7 people are mortified by your terrifying experiences. If it's actually as bad as you're putting out there, right? It's probably not going to be that big of a deal.
I think you also mentioned it too, though, right? Does it has it helped you with lending or with the banks to some like they know the projects you've done? Is that what you I forget.
It did in the beginning. I mean, the lender could look me up and they saw that I was real, and that was cool. But today, and they look at my schedule of assets and my debt schedule and the revenues, and that is worth more than the online presence. The online presence really helped when I owned multifamily strategy. I was trying to get people, another step above just the YouTube. But since I'm not doing that, I'm just doing real estate full time. I'm just doing the videos because I like to do the videos. It's fun to help. But if that's not you, don't do it.
Yeah, totally agree. I think Trisha has it in her though that she does want to help people, and I think she wants to share her journey. And I believe she considers herself maybe starting a little bit later on this real estate path. So I think she'd love
Hmm.
to share that story, kind of like Frank, the old guy Aria. He talks about his failures in the beginning part, and it was hard for them to start the second time getting back into real estate. So I think a lot of people enjoy him sharing his struggles and his successes.
Yeah.
But Troy Roberts is saying, hey, Cody, I have two boys, 14 and 15. At your age now, what books would you recommend for them to read for real estate and entrepreneurship? Hmm,
It's not free. I'd see if you could borrow it from someone, but Deals on Wheels by Lonnie Scruggs is one that I've recommended time and time again. That's a good one. Other than that, Grant has a great book, How to Create Wealth Investing in Commercial Real Estate. It's a short, easy read. I'd start with those.
nice. I think Troy will be unable to make it to Vegas, so I don't think his kids will be able to be there also. So I think he has some kind of family. I think his daughter has some sort of event going on. Um, let's see. Hmm.
Also, for Troy, situational learning is very helpful. Something that I was told when I was 19 by the owner of the brokerage I was working at. We went into a coffee shop and he gave me the example. And you could do this with them if they do any chores around the house or do something to earn a little bit of money. Have them spot you the $4 coffee and then give them $5. Just say, hey, I forgot my wallet in the car. Can you buy coffee? They put up the $4. You give them five as a thank you. When you get back to the car, save you time, which is a learning lesson for them to conceptualize. They made a 25% return in 7 minutes, and it gives them the idea of micro transactions and small loans with big returns. That's a great lesson that I learned. You can make really massive, oversized returns on small loans, and that's a good way to multiply money. So you could do that at like a coffee shop or a restaurant. Like, hey, I left my wallet in the car. Would you buy lunch? I'll pay you when we get back. If they spend $40, you give them $45 when you get to the car, something like that.
Nice. I like that. How do you personally evaluate a mistake to make sure you never repeat it?
Well, you can write down your takeaways. Be intentional. So if you have a mistake, like what's a mistake that you've made, Mark, that you can think of and share off the top of your head?
Yeah, like I said, just thinking real estate was easy. Like I went all in very quickly, and that's definitely just something. If I probably probably came across Dion and Zuber a lot sooner. It would have saved me a lot of headaches and definitely had a more efficient portfolio. And I
So
probably
what?
would.
So what's your takeaway from that?
Sorry, I hit mute. Yeah, definitely kind of what Dion talks about. Definitely jumping in was great, but realize that it's not that easy, and kind of get your feet wet, let your properties get seasoned, kind of take it a lot slower, and really realize that no matter how great a property may seem, there's always going to be problems that come up, whether it's tenant related, whether it's maintenance, but it's never as easy as people are making it out to be. So for myself, it would definitely be kind of not buying so many properties at one time. Let them each kind of get seasoned, or make sure you have the reserves and funds to weather that storm a lot more efficiently. So, like for myself, I thought whatever reserves I had was sufficient, and as I realized, it's kind of just got wiped out very quickly. Which,
Hmm.
I think you touched on it too. It's kind of at some point you're trying to figure out how to get money to pay for certain things, right? And you do get. I mean, it helped in a sense where I became resourceful, but I could have avoided a lot of that also. You
So what's another takeaway that you got from that situation, a mistake of overbuying?
Um, let's see. I think even building a better initial team would have been more helpful. I kind of relied more on a friend who was already investing in that market. So the
Hmm.
team that I guess maybe he put together was probably not the team I would have been using today. If I was starting today, that probably
Sure.
wouldn't be. Yeah.
So you would have invested more in a team. You would have slowed things down a little bit. If there was one other takeaway that you had to pick, like, if you had to choose one other thing off the top of your head, what would it be?
One other thing is I probably would have tried to invest closer to myself at the end of the day. I would have probably tried to find a market and boots on the ground in an area that was slightly closer. Um, yeah.
Yeah, and the reason I wanted to dig into that a little bit more is people usually stop at the first takeaway. You had to think the most on the second one. And when I asked you the third one, because you'd already thought through the second one, you came up with another answer. Most people don't do that when they're coming up with their takeaways from these learning lessons. So, back to that question, be very intentional. Get as many takeaways as you can from a situation. When you think you've ran out of takeaways, try and find one more. And you might be surprised that you find a few more that will allow you to grow very quickly. A lot of my early videos talk about that. I would try and get a takeaway from every situation, and I'd get multiple often. And that allowed me to grow and learn rather quickly in comparison to other folks in this space. And that's not what it's about. It's about individual self growth, but you get the idea.
Cody Evers, who just closed on a sixplex, I believe, recently. He's saying, "What's the best way to set up seller financing payments? I haven't found a great way to do it."
Note servicing companies, yeah, it's on auto pay. So it'll ACH auto draft out of your account. It'll hit their account. At the end of the year, you have a record. You can log into your portal. It's like $8 per party, or you can be really kind and pay both parties fee, and it's like a setup fee of 100 something bucks, and then $16 a month, or $12 a month, or $20 a month, and whatever the company may charge, it is worth it. You don't have to think about it. They'll send you an interest statement at the end of the year, and they'll track the amortization if there is any, and any balance that is owed and when it is owed.
Troy also says, "I like that, Cody. That's smart. They are at the age to having to look for a job. Plus, they are constantly around us helping with value-added projects with our primary and other real estate projects too." Hey, Gus is here. Good morning, Gus. Gus was on my live stream on Friday with Emily. He killed it. Gus had something interesting. I thought. So a lot of people maybe like to say unit count, right? So there's people out there that are like, oh, the unit counts don't matter. They're not, you know, as far as sometimes smaller is better, more efficient. But Gus kind of was like, no, I enjoy the bigger unit count because I kind of worked hard to get these. Like I like to put it out there that I have, 73 units, and not to be like bragging or anything, but he likes putting that out there where maybe some people are, think he's kind of maybe bragging or whatnot, but he's like, no, I've worked hard to get these 73 units, so it means a lot to me, and I just like to show like the effort that I'm putting in. So, what's your thought on maybe unit count?
I have goals with my wife that we've set for 2026 and the coming years. Unit count is not one of them. Net operating income is one, though. So growing the bottom line, not necessarily after debt. I mean, the debt's going to scale as the portfolio scales. But rather than saying I'd rather have 73 units or having 173 units, I'd like to take the net operating income from 900 grand a year to a million five a year. What do I have to do to do that? And focusing on what it actually gets you rather than what you're just trying to have, right? Because there's people that have 73 units, and I don't mean to just use Gus's number, but there's people that have 100 units that will make less money than people I know that have 50 units. Dion's a great example of this, right? So rather than just focusing on how much rentable square footage you have, or how many apartments you have, or how many rental houses you have, or storage units, how much net income do you have? How much net operating income do you have? So I try and grow that number rather than just growing the unit count. Because I've got a 7 unit that has a higher net income than my 12 unit. And my 12 unit has a higher net income than some people's 20 unit. Some people that I've met, they've got 20 unit, 25 unit, that makes less net operating income than the 12 or the 7. So you, it's not an important metric. I mean, you get benefits from it. I love having over 100 doors. It's beneficial every time rent goes up $100. It's an extra 13 grand a month. It adds up. But rather than having that, what can I do with my portfolio to grow the NOI every year? So I can do that. The cash flow goes up, my net worth goes up, my unit count doesn't have to go up to do all that.
Yeah, I totally agree with that. I think there's a lot of different ways to look at it, but I did find Gus's take on it kind of unique. I never ever really heard someone say like to them, it's very meaningful unit count just because they've worked so hard for it, and this is the grind they're putting in. So they kind of like showcasing, how much units they have. But um, Trisha is saying, good point, Cody. That was a good deep dive. I believe it was asking about the mistakes I made and how people usually stop at one and don't really think maybe about the next mistakes they've made. Cody is where did oh Cody was asking, what servicing companies do you use? I guess he's used one already, but setup was painful.
Setup can be painful. I've used Evergreen Note Servicing. Setup was painful. It was all right after it was set up. I've worked with Frontier Note Servicing, which is called FINS, Frontier Independent Note Servicing. I've worked with Vista Note Servicing. I've had my attorney service the contract for real estate contract. There's a lot of them.
Let's see. That's the last. I know you and same thing in that video with you and Zuber. You folks both touched about how important learning how to communicate is, right? And your ability to build wealth. Has that always been something easy for you, or how did you get better at communicating with um, individuals out there?
Practice, a lot of practice, doing videos, YouTube videos, hearing how I talk, learning about the mistakes that I make. It's helped. I used to say in every sentence. Now I still say it, but I say it a lot less. Just because I've watched myself, and you just got to get out there and try, practice. Again, be willing to make mistakes. You look at my first ever YouTube videos, they were awful. How do you fit 30 edits into a minute 20-second video? You want a master class? Watch my original videos.
Yeah, it's not that easy. People think it's easy, I think, and you just but it's not. It's you got to get comfortable with it. And like, yeah, like you're saying, and I say it all the time. I'm definitely not polished at all, but I think live streams is the way to go if you can. Trisha, it's very challenging to be on a live stream. I think, trying to think at the same time, keeping things engaging, and especially when there's comments coming through the chat. So I definitely think it's very helpful. It's helpful in how you present certain things and even talking to different individuals. Hey, Invest to Wealth is here. Good morning. Jeff is saying, do do auto ACH from our checking account into the provider's account. Our bank has no charge for the ACH, he's saying.
Yeah, you could do that. You just have to track the amortization, and if there's ever a dispute in the amount owed, you don't have a neutral third party to verify what's been paid. Like, you're gonna have to verify it yourself and take that to court. It's easier to have a company, but ultimately it is up to you.
Let's see. Ooh, what is the difference between being in the room and actually using the room?
What's the context?
I
I'll say
guess.
that question.
Oh no, that's just I have my Chat GPT questions going on here for the
Oh, okay.
yeah.
Yeah. So is that in regards to like going to one rental at a time event? Okay.
Yes.
Yeah. Well, if you're just in the room, I like to think about this. You're in the back corner, you're just taking notes, you're getting your own takeaways to the extent that you can. That's better than not showing up. But the ability to get takeaways from others is where you can really have a lot of growth. So, running the idea that you heard, like you take a note, it's like, oh, I learned this from Matt. What do you think about it? And getting someone else's perspective, that can enable a lot of growth. So the difference, I'd say, of just being in the room versus utilizing the room is the level of confidence you have applying the information you got. If you're just taking the notes, then you're not going to have a very high level of confidence that it's going to work because you heard it from one person and you haven't really war gamed it with anybody other than in your head or on your notepad. Whereas if I got that takeaway and I ran it by you, and I ran it by Dion, and then I ran it by literally anybody else and got their input, I could go make those actual next steps with confidence because I got a bunch of people's perspective and now I get to make an informed decision. I qualified the data. So it's probably going to determine how much you actually use from the event that you go to.
Yeah, definitely. I think for Zuber's event, like he always touches on, it's a little bit different than maybe other events, right? So the speakers have so many times to present, and then people can come up and ask questions. So for you, if people that are going, if there's certain speakers that you have, it'll be good to be prepared with maybe certain questions you may want to ask them heading into the event. And I would say that a lot of times just realize that the event is being recorded, so you can always watch later or take notes a little bit later if there's something you miss. I think it's more getting to sit down, even network and talk to the other guests that are there, and just find people in your market or find people doing what you're doing. If you're doing short-term rentals, I guarantee there's going to be other people doing short-term rentals there. But just sit down and then find those people and get their numbers, exchange contacts or whatnot. But the event is being recorded, so if you missed anything, just remember you can always go back and listen to it, take more notes, and if there is like pace more. But if there's questions you want to ask them, be prepared. Have your questions ready, so when the time comes, you can jump in line and have these questions ready to ask him.
Yeah, and it's important to recognize that there's other people in your situation. That was a big struggle I had in the beginning. I couldn't really relate to anybody. I didn't know anybody that had done what I was doing at that age. I met people that had bought a rental house. Eventually, I found people that were my age that were doing what I was doing. And some people were doing stuff at the same level, some were doing close, some were doing bigger. And as soon as I met those people, it made me feel more comfortable about what I was doing. So, whatever situation you're in, whether you have a rental, whether you have a bunch, whether you have none, talking with people that are in this same position with similar goals is helpful.
Charles Helicopter McCune is asking Cody, have you ever set a combined profit goal, yours and clients, setting a activity goals to expect an outcome?
I've set goals for myself. I've helped some of my clients come up with their goals. I'm not setting a goal for them though, because that would be meaningless. And I can come up with a number and why I think it makes sense, but it has to really resonate with what they want. But for myself, yeah, I've absolutely set profit goals, and there's been occasions where I have missed it, and there's been occasions where I far surpassed it, which meant I probably didn't have the right goal, but I shouldn't have been able to surpass it that quickly. So, yeah, it is important. If you're not shooting for anything, you in fact will not get anything.
So, with 2026 right around the corner, maybe what are some things Cody's working on for 2026, and maybe one tip or advice someone today that's trying to reach financial freedom in the next 10 years, what advice could you tell them that would definitely put them on the right path?
There are a few stages in business that you need to figure out where you're at. You can go build a business, you can stabilize your business, you can optimize it, take it to highest and best use, and you can reduce risk. Those are the four stages that I see. I got through the first big stage of build phase where I was building the portfolio. I stabilized the portfolio now, and I've also optimized majority of the properties. So now I'm in the reduced risk phase of stacking liquidity, getting to nicer properties. That's part of optimizing a portfolio, but it's also reducing risk, going from a whole bunch of old, maybe going from 130 old to 60 to 70 new units where the rent is double. So I'm in that stage of reducing risk, liability, exposure. You have to quantify where you're at, and then you have to stick to it until you get to the next phase. So if you are still in phase one where you need to go build a portfolio, you don't have what you want, I wouldn't be just focused on, oh, I have to optimize it right away. I have to get this perfect deal. That's not necessarily the smartest path forward. You shouldn't go build a house of cards where you just go buy a bunch of deals and don't optimize them. But you got to buy projects first and then make sure they're stabilized before you go optimize it, and then before you go reduce risk, which could look like paying down debt early. It could be buying out partners. It could be upgrading the properties. Identify where you're at and what the most logical move is next, if you accept that those are the four business stages. If you don't like that, don't use it, but that's what I found to be true. And so if I were someone watching this, I would figure out where I'm at in that cycle, and then figure out what do I got to do to get to the next cycle. And for me, when I was stabilizing the portfolio, that meant, and that was just a year and a half ago, I have to move to Moses Lake. Like you mentioned earlier, you wish you bought a little closer. Well, I moved a little closer to my portfolio. So I live 10 minutes away from most of my stuff. It helped. When I get to the reduction of risk, getting risk off the table, paying down some loans, getting rid of the last little bit of partners, then I won't live here anymore because I'm not in that stage anymore. But I had to identify, hey, I need, in order to stabilize, I got to be here. That was important for my stuff. And a year and a half later, the stuff is stabilized. So it worked.
I see the grumpy contractor tuning in, so morning. And also say Dion tuning in. Hopefully his trip is going well. Grumpy, yes, I was gonna bring this up. So Jim is asking because Cody posted something in school. You have to go check out that picture he posted. But Jim is asking about how did your plumbing repair go, Cody?
Oh, I just got a garden hose and I hooked it up. No, kidding. So that for those who don't know, if you're in school, you'll see it. But basically, you have a normal trap under a sink. Looks like this. Well, this one looked like this. It was very odd. So I haven't even touched it. I mean, it doesn't matter. It's a vacant unit, so
I
I'm not.
liked Val's comment. I don't know if you saw Val's comment on your post in school.
No, I didn't.
He posted something like it looked like the plumber just grabbed whatever parts he had in his truck and just put something together.
It'll probably so. The owner used to work on it, so they did what they thought they needed to do. It's so bad, but you know what? Whatever. It's empty right now, so I'll get it all ripped out. I'm replacing the vanity anyway, so I'll get new plumbing in there and put a Studer vent and go from there.
And I did see you post something also on Instagram, right, on one of your roofs. And I think I didn't catch the whole caption. You were saying something about I think if you're renting, you don't have to deal with this type of thing or something. Well,
Oh yeah, my buddy posted that. But basically, my roof blew off, and so I learned how to do a roof. I went on and redid the roof myself because one of the roof faces just decided to pick up like a bird and go somewhere else. So I went up there and learned how to shingle a roof, and that was fun. I just happened to get the worst color match ever, but I didn't really care because basically the roof blew off, and then we had massive downpour and it flooded my units.
oh man, I didn't know that part.
Yeah, well, you only know what people tell you.
Yeah.
So my tenants woke up soaking wet. That was great. But hey, we got the roof fixed that next day. It just happens to have black uh, shingles, like in a sea of gray shingles.
No one cares, man.
Oh well.
Yep, it's all part of becoming a landlord, right? And like I said, right before we jumped on this, I had a maintenance request come in on my Saturday live stream with Nick Lead Prejado. We had to reschedule because he's also dealing with a leaky ceiling or roof, I believe, and the contractor was on his way. So it happens, right? But as you realize, there's a solution, and you get through it, and it's not usually as big of a deal as it may present itself in the beginning. And there's always, a way to figure it out. So I'm glad that worked out for you. Let's see. We'll try to get Nick on maybe next week, Monday, with you.
Cool.
And yeah, this was always fun. This was always a good people. This is Flavio's favorite day. He said Flavio likes you're his favorite guest, so Flavio definitely enjoys this one. Um, oh, hold on. Grumpy contractors. Oh, insurance companies they do Google Earth shots. So he's saying, yeah, they might care about the different colors on your shingle work.
I'll paint it.
There you go, Jim.
Paint the
Always, yeah,
shingles.
always a solution to it. Oh, hold on. We'll get to Gus's question then before we wrap things up. How did Cody build his portfolio? I may not know the story. May give us a quick version of it, Cody.
With,
Hey,
of course, Oreo joins at the end. Oh, I started buying apartments, seller finance, owner would hold a contract. First deal was on the MLS. I bought it with no money out of pocket, without syndicating, without a family friend, without a family member. I bought a 12 unit and cash flow day one, nothing out of pocket, had upside. It was 3 hours from where I lived. I lived in Tacoma. Now I live in Central Washington. But I bought that little 12-plex in Quincy. 9 months after that, bought an off-market 12-plex, 40 minutes from Quincy in a place called Moses Lake. Quincy was nice, corner lot next to the church, next to the Microsoft data center. Moses Lake was ghetto, not the city, but my building was ghetto. It was next to the tattoo parlor, the pot shop, and the food bank. So I went from a nice property to a really crappy zero down 12plex. But I basically bought it for half the price of the first one. Shortly after that, bought a 6 unit seller finance off market in Moses Lake. It was probably a 5 minute drive from that crappy 12plex, a little nicer than 12. After that, bought a 38 unit zero down. That's where I first started taking on partners. So I had partnered with someone that I worked with at the real estate brokerage. He was a few years older than me. He didn't bring money to the equation, but he helped me manage that building. It was a 38 unit, so that was double on the portfolio. Bought for $2 million. Seller financed $1.7 million. We had to come in with 300 grand down. We didn't have 300 grand, so we brought in 3 people, clients of the brokerage, basically people that I'd met along the journey. I helped one of them sell a flip house here and there, and so they each put in 100 grand. That was a 300 grand down. Bought that deal. Then proceeded to buy some 6 units, some 7 units, some more 10s, 12s, 5s, and duplex, triplexes. Bought some stuff outside Seattle, bought a hotel, bought some motels. Last couple of years, I bought out majority of the partners, so now most of my stuff is just me and my wife. But we've got our biggest properties. So we got a 39 unit, 27, some new construction stuff, no partners, and the smaller stuff we have in partnerships. And started buying in a market that I didn't really know. I had to do a lot of research on a little over 6 years ago, and continued ever since.
So at your peak, how many units? And I think part of the story is also no bank loans until recently, right? Like when was your first bank?
Yeah. Well, my first bank loan on a purchase was like 6 months ago. But at one point, I probably had close to 250 rentals. That consisted of motels, hotels, apartments, RV park. And I sold out of some of those just to buy out partners on others. I didn't make a profit on all of them. There was deals that were making money. There's a 12 unit that's cash flowing probably 5 grand a month. The mortgage on it that I had negotiated, the seller finance payment was $3,100, and the property makes over 12 grand a month. So like that was a deal that I was in, and I sold out at a slight loss just to separate from that partner. And I took that money that I had put in over a 2 year period, and I just used it to buy out partners on my other stuff. So I focused on, hey, I don't need to make money on everything. Let me just own the stuff that I own. That was around the time that I'd been listening to Dion more, and chill. So I cut my portfolio in half to about 130 rentals, and still buying more, but now I'm doing a lot more new construction, ground up, building a 21 unit right now. And I'm working on 1031ing my old stuff that I own by myself into new stuff that I own by myself.
Very cool. And I don't know if you know off the top of your head, what bigger pockets episode were you? Do you remember, or your main
Wait,
one?
554.
Yeah. So Gus, if you are still there, I think 554 or somewhere in that area might be Cody's first episode on bigger pockets. Like I said, this is always a fun time. I'm glad I get to connect with you on a weekly basis. If I don't see you by then or talk to you by then, have a Merry Christmas. I will be back tomorrow with Brandon, who was super excited when he heard you were doing build to rent. He got super giddy about it, but I'll be back with Brandon tomorrow. We skipped last week. I had a shoulder procedure. But everyone, thanks for tuning in, and I'll see you folks tomorrow, hopefully.